In last week's video, we took a detailed look at the CARES Act distributions for people who took money out of their retirement accounts for COVID-related hardships. In today's video, we're going to go even more in depth on Form 8915-E, which is the primary tax form you're going to have to look at and understand when filing your taxes around COVID or coronavirus-related distributions. So stick around, grab your cup of coffee. I got mine right here. And let's go. Good morning, everyone. My name is Mike the CPA. We make weekly videos that cover topics like finances, investing, and taxes to help you build wealth and understand these complex financial subjects. I've got two examples I'm going to walk through with you here on camera right now, but then I would also want to spot check or highlight some of the more complex areas of the form just so you have a better understanding of what you're doing when you're filling this out. Okay, here we go. Two examples of using Form 8915-E, which is what you're going to use when you're going to be filling out your taxes if you took a COVID-related distribution out of your retirement plan, out of your 401k, out of your IRA. You're going to fill out your name and address information up here. I'm not going to fill all this out in the example. You guys get the idea about that. If this is an amended return, you're going to fill this out right here. You're just going to check mark that box if you're amending this form, which you may have to do under certain circumstances, but hopefully not. Hopefully you can avoid all that. This area says before you begin, the Form 8915-D and Form 8915-C relates to previous year disaster distributions. In other words, it relates to an entirely other circumstance that occurred in a previous year if this applies to you. And those qualified disasters would have been determined for 2018 and 2019. If you had to file any of these forms in the previous years, then those forms are going to affect this form. If you did not have a disaster type of distribution, which these disasters they're talking about here do not relate to COVID. This is completely different. So for the sake of our example, we're not going to be even looking at this, but I just want to make you aware that these forms came into play for qualified disasters for 2019 and 2018. If you took a qualified disaster distribution in those years, it may or may not affect this form, and you're going to have to start by looking there first. So that's what that means. If you did not take a qualified disaster distribution of any kind in previous years, you can just skip this part altogether. Don't even have to worry about it. And I feel like for most people, they're just going to be able to skip this. And by the way, for 2020, the IRS deemed the coronavirus-related distribution to be the only qualified disaster there was in 2020. In this first part, we're going to look at an example where we're not using an IRA. It's in a retirement account other than an IRA. In part one of this form, you're going to include all of your retirement distributions, including those from IRAs. In line one, we're talking about distributions from retirement plans other than IRAs, and that's what we're going to look at first. And we know that, how do we get this information right here? Well, when we take a distribution from a retirement account, it's going to come on a 1099-R. And I'm not going to, in my previous video that I covered on coronavirus-related distributions, I covered this in a lot more depth, so I'm just going to go through it quicker here. But we see from our 1099-R, we have gross distributions of $10,000 and $5,000 of which is taxable. But regardless of how much is taxable and how much is not here, doesn't matter right now because we're going to assume the entire $10,000 was taken out as a qualified disaster distribution from COVID. And notice that the box for IRA, SEP, or Simple is not checked, which indicates this is not an IRA type of retirement account that the money's coming out from. Therefore, in box 1, we're going to enter box 1A, we're going to enter $10,000, and then in box B, because all $10,000 is a qualified disaster distribution, we're going to enter $10,000 there. Unless we have distributions from these other areas as well, we're going to skip that. None of this is from a Roth IRA in this example. We're going to skip that. We're going to total up. In box 4, we're going to total up the amount in column A, which is $10,000. And then in box 4B, we're also going to total the amount, which is $10,000. Column C really relates back to these kind of forms, and if you've taken above $100,000 in distributions out of your different retirement accounts, then this might come into play, and you can view the instructions for that, which we're going to look at later in the video. Line 5, it says if you completed column C, enter the excess of the amount on line 4, column A, over 100,000. We did not, so right away we're going to skip down to this highlighted part, and all you're going to do is essentially, the way I interpret this is you're going to say 10,000, subtract 10,000, and it's going to be 0. Because if there's differences in this, in between the amount that you distributed versus what's considered a qualified disaster distribution, then that difference is going to appear here. In this example, there's no differences, but carefully read the forms as you go through this and you should be fine. Believe it or not, we're almost done with this example. In part 2, it says qualified 2020 disaster distributions from retirement plans other than IRAs. We already know that this is not from an IRA, so we know that we're going to have to fill out this area first. Box or line 6 is if you completed anything column 1C, which we did not, so we can skip that. Next on line 7, I think things can get a little tricky here. It's not complex, but it says enter the applicable cost of distributions, if any. I said, what is that? I had to actually look at the instructions to figure that out. But what they're talking about, and you can view the instructions as well, I'll make sure I link them below, is they're really talking about, is there a difference between box 1 of your 1099-R and box 2A of your 1099-R? The cost is the difference between the two. Therefore, you basically subtract 5,000 from 10,000. That's what they mean by cost right here and on line 7. So the difference between these two amounts is going to be shown right here on line 7. And that's the way I interpret this. If there is no difference, if these were both 10,000, then you would just either leave this blank or put 0 there. But in our example here, the amount is 5,000, which is the difference. It says subtract line 7 from line 6, which there's nothing on line 6, so right away we're at 5,000. It says if you elect on line 9, if you elect not to spread the taxable amount over 3 years, check this box, which we want to pay tax on this over 3 years, so that we're not going to check this box. If you wanted to pay this all in the same year, you could. I covered that in my other video, but you can check it out there. But for this example, we're just going to keep moving forward. We're going to elect to pay this over 3 years instead of having all the money taxed on us in 2020. So you're going to take 5,000 divided by 3. You're going to get this amount, and then line 10, enter the total amount of any repayments you made before filing your 2020 tax return, but don't include repayments made later than the due date, including extensions for that return. Do not use this form to report repayments of qualified 2016, 17, 18, etc. disaster distributions. It says see instructions. Let's pretend you recontributed $300 back to your retirement plan because you took the money out and you didn't realize you realize you don't need it all, so you put some of it back in. Well, that's going to whatever amount you repaid, as long as you repaid it before the extended due date of this tax filing for 2020, which would be October 15th of 2021, assuming you extend your return, or April 15th if you don't extend your return, then you can subtract from the taxable amount whatever amount you repay. Therefore, you would take the $1,666, pretend as you paid $300 back, and so therefore the amount you're going to pay tax on is only $1,366. And that amount is going to be reported on line 5B of your 1040. Okay, here we go. Example number 2 for you guys. It's very similar, but different. This time we have 30,000 in distributions, all of which is taxable, 30,000. We're assuming that all the distributions are for the coronavirus related hardship. That's what we're assuming in this example. We're moving on down the form on this 1099-R. Everything looks the same, except this time, this box IRA/SEP/simple is checked, which indicates that we're gonna have to report this information in a different spot on form 8915-E. So we're gonna go over to our 8915-E now. And here it is. We're going to move through this a lot quicker now since we've already looked at this once and you guys hopefully get the idea. Normal information up here, name, address, and all that. We're going to come down here, but in the first example, we filled out this line up here. Now we're going to fill out line 2 instead because it's distributions from a traditional IRA, SEP, or simple. Column 8, line 2, we're going to list 30,000 from our 1099-R there. And we know all of it's related to the qualified coronavirus distribution, so we're going to list 30,000 there. Box 4A, we're just going to add up the totals in this column. Box 4B, we're just going to add up the totals in this column. We don't have anything in excess of 100,000 in distributions, and we didn't fill out or file any of these previous other forms like the 8915D or 8915C in previous years. We can ignore column C. We're going to come on down the line here. Line 5 is basically just going to be this minus this, which turns out to be 0 in our example. There's no difference between these two numbers, so that's why it's 0. Already moving down to part 2. Nope, we're not going to move down to part 2 because part 2 is only for retirement plans that are other than IRAs. Therefore, you're going to fill out part 1, and now you're going to skip right to part 3 on the next page. Here you go, part 3. Qualified 2020 disaster distributions from traditional, SEP, and Simple and Roth IRAs. There we are. So the first question on line 12, it says, did you receive a qualified 2020 disaster distribution from a traditional SEP or Simple Roth IRA that is required to be reported on Form 8606? If you did not, and in this example, we're assuming the case is no, then you're going to check mark this box no, and you're going to skip right to line 13, or sorry, you're going to skip right to line 15. So you would skip these first 2 lines and go right down here. If you did receive it from, and you have that Form 8606, then you're going to check mark yes, and then start from box 13 and work your way down. But in our example, we can move right on down to line 15. It says, if you completed line 2, column C, which we did not, enter that amount. Otherwise, enter the amount from line 2, column B, if any. Don't include on line 15 any amounts reported on 2020 Form 8606. Therefore, the $30,000 is what is found in box 2B here, or line 2B, right here. That amount goes then in part 3, line 15, and that's where we start with that. It says then add lines 13, 14, and 15. We had nothing up here, so we're just going to add line 15. This is 30,000. It says if you elect not to spread the taxable amount over 3 years, once again, then check this box. So we could, if we wanted to, we could pay 30,000 all at once, but we want to pay this over a 3-year period, so we're just going to not check this. And we're just going to divide 30,000 by 3. You get 10,000 here. We're not going to have anything repaid here for the sake of this example. So therefore, on line 19, the amount that's subject to tax is $10,000. The amount is going to be reported on line 4B, which we're showing right now on the 1040 form. That is where this number ends up at the end of the day. This is just general tips, guys, when you're filling out tax forms, especially if you're not familiar with them. You can actually find the instructions to the form. I'm going to link this in both the comment and description section below, so make sure to check it out if you have questions regarding this form. The couple things I wanted to highlight, it says, who must file? It says file 2020 Form 8915E if you received a qualified 2020 disaster distribution from an eligible retirement plan and the distribution was made in 2020 before December 31st. This part is really important, and I think a lot of people might not understand this. It says when and where to file. File 2020 Form 8915-E with your 2020 Form 1040, 1040 SR, or 1040 NR. If you are not required to file an income tax return, but are required to file Form 8915-E, fill in the address information on page 1 of Form 8915E, sign the Form 8915E and send it to the Internal Revenue Service at the same time in place you would otherwise file your normal tax return. Now, even if you don't have an income tax return filing requirement, you still have to file this form if you took one of these distributions. I'm not going to read all these instructions to you guys. You guys can obviously read this for yourself. There's 9 pages of information here, but the distribution is basically any distribution that was made in 2020 for coronavirus-related hardship. It talks a lot about qualified individuals. Basically, you can tell if you're a qualified individual on this page of page 2 of the PDF. It says you are a qualified individual if you are an individual meeting any of these following criteria. You were diagnosed with a COVID, your spouse or dependent defined section 2 was diagnosed with COVID. So there's 2 examples of a qualified individual. Number 3, your spouse or member of your household experienced adverse financial consequences of being quarantined, being unable to work, having to close or reduce hours of their business, things like that. And then in terms of members of your household, it's basically anybody who normally resides in your household. That's what you'll see if you read these instructions line by line. Remember, the total limit that is a qualified disaster distribution from COVID is only about $100,000. If you want to know what type of retirement plans qualify for all the type of plans are listed right here in the instructions on page 3 of 9. Other things just to point out as a reminder that there's no additional 10% tax even if you're under age 59 and a half when you withdraw this money, as long as it's deemed to be a coronavirus related distribution. It says, however, any distributions you receive in excess of the $100,000 of qualified 2020 disaster distributions limit may be subject to the additional 10% early withdrawal penalty if you took out more than $100,000. Be on the lookout for that, because that can really rack up your tax bill. If you do married filing jointly, then both you and your spouse will each have to file this form, 8915E. You can file the return all as one package, but both of you will have to individually fill out this form for your specific distributions you took out of your retirement plan. The IRS does provide a little bit of additional guidance starting on page 4 of 9 of how to fill out form 8915E. But I think their examples are not well presented. It's really confusing the way they present this. I don't think they're going to be common examples for most people. I think they should have added a lot more clarity to this. They did not, in my opinion. That's just my opinion. Hopefully they'll add more examples, because people are going to be very confused, I think, when trying to fill this out. But nonetheless, the examples are here in the publication. I mean, in the instructions, if you want to see them. Although, like I said, I don't think they're that helpful. They're not well presented, as I previously just stated. In some circumstances, you might have to amend this form if you repaid part of the money later on, because you have 3 years to recontribute the money to your retirement plan, the money that you took out for the coronavirus distribution. But it might cause you to have to amend your form depending upon when you repay it. As long as you repay the money before the extended due date of the return, if you extend your return, then you're fine. But if let's say you're in 2022 and decide to repay for 2020, well, then you're going to have to go back and amend your 8915E and also file an amended 1040X to get your money back or to reflect the repayment. And right here it says the timing of your distributions and repayments will determine whether you need to file an amended return to claim them. If you need to amend your 2020-2000 form 8915E, see amending form 8915 later in the instructions. Okay, ladies and gentlemen, that's the video today. I hope you got a lot out of this, and hopefully it clarifies some of the complexities and confusion around this form. Remember, if you have multiple 1099-Rs, make sure you add those totals up. Because in the examples we looked at, we just looked at having one 1099-R, but I realized some people might have more than one. You'd follow the same process. You would just add up the totals on those different lines we looked at in this form, and either in part 2 or part 3. Part 4 of the form, which I did not talk about, you don't even have to fill out at all. So really, the areas of this form you really need to understand is part 1, 2, and 3 based on your circumstances. Feel free to leave your questions and comments down below. It'd mean a lot to me, guys, if you drop a like on this video, share this video with family and friends, especially if you know people who have these kind of situations, who need to fill out this form. I think this video will help them. And subscribe for our weekly videos on finances, investing, and taxes. Have a wonderful week. Live life uncaged. And I'll see you all in the next episode. Love y'all. Peace.